afternoon and welcome to the Health Bank, a new program from Alera designed specifically for the banking community. My name is John Cassell and I'm Senior Partner at Spring Consulting Group, your Alera company in Boston. I'd like to share with you some of the Health Bank program elements we'll be making available initially in Massachusetts and then later throughout the country. Health Bank is designed to help you enhance the health and productivity of your employees. At Alera, we have a whole range of experts that can provide data, tools, research, and processes that will help you make a real difference to the performance of your workforce, starting today. So here is our agenda. We're going to talk about what is Health Bank, a little bit about Alera and Spring, Health Bank incentives, looking specifically at how you can improve health and productivity, how you can pay less and use less health support for your employees, and then some next steps. So mainly covering these areas over the next half an hour or so. So let's talk about what Health Bank is. It's a new member group and it's free to join, and it looks to make your banking employees healthier and more effective. It's an opportunity to look at ways in which you can fund employee benefits more efficiently, keep employees healthy and productive, keep employees at work versus on leave. In this case, we're talking about sick leave, getting sick employees back to work faster, and helping banks to be compliant with health and welfare legislation. And finally, we have an aim to really start to give banks a say in what happens in Massachusetts healthcare. We have a leader in the government in Massachusetts that is, as you probably know, an ex-managing director of a health insurer. He has a great deal of knowledge and experience of the health sector, and as a large group, we have the opportunity to have an influence on how healthcare is structured. So this whole program is designed for banks specifically. So let's talk a little bit about Alera and about Spring. So Alera is a relatively new player on the employee benefits scene. It was started in 2016 with a group of companies coming together, and there's been dramatic growth since that time. There are now over 60 companies throughout the US, and the revenue has increased to $410 million in this last year, and it's growing at about 8% per annum organic growth. There's getting close now to 2,000 employees. This says 1,700 plus, but it's grown since we wrote this slide, and it's in the top 10 in terms of independent employee benefit companies in the US, and in the top 20 in terms of independent advisors and agencies in the US. So it's a very major company, and you'll see from the growth by division that employee benefits continues to be a major player, but we're also involved in property and casualty and wealth management. So that gives you a sense of what Alera is, and what we have here is the opportunity to bring those resources to bear in terms of supporting your activities. So let's talk about Alera in New England. There's a number of local organizations besides Spring. Spring is based in downtown Boston, but we have 8 companies in the area that are providing employee benefits solutions on a local basis and on a statewide basis. And we have the opportunity to attract a great deal of specific expertise that we can apply to the banking sector that would be available to you. So this is an interesting group, and we will be able to talk about some of the other players as we go on over the coming months. So let's talk specifically about Spring now. Spring is an organization that has a background in employee benefits and actuarial work. It's been operating in Boston since 2004, and it provides a wide range of services to small, medium, and large-sized organizations on employee benefit program evaluation, design, funding, marketing, and integration. So the whole gamut of things that one would think about in terms of employee benefits. And we are in 2018, and we originally started off as a division of Watson Wyatt in the US. So our background is very strongly in being able to help you with the design and funding of the programs that you run and advice about how they should operate and making them more cost effective. So let's talk about some of the areas that we're looking at for HealthBank itself. We're looking predominantly at improving health and productivity, and we believe that the solutions that are available are not simply available through one insurance company. What we have found with our clients is that they are interested in finding best-in-class solutions for their employees, and that may come from their core insurance company, but it may come from other providers outside that can make a difference. So just looking at basically how insurance companies are set up, with the cost of insurance wrapped up in one company, you can identify the types of risk that you are having as an individual firm and eliminate insurer profits by considering how you can insure your own risks as opposed to being part of a pool of risks and therefore incurring the administration costs around that. You can manage excessive claims trends by using specialist providers. So if you have particular claims costs that are causing excess cost in the organization, then you can identify these and use specialists to take the cost and reduce the cost curve and apply that to your overall program. And there are a number of examples that we have of specialists that can do that for you. Creating effective wellness programs to eliminate claims. This is around not simply providing wellness as a perk, but providing wellness that is focused on some of the underlying issues that your workforce has, and therefore stopping them needing to go into hospital at a later stage. Looking at the people that are providing you with health insurance and providing provider contracting that's best in class. The difference that in cost that people pay from one organization to another is dramatic, and having contracting arrangements that are most effective for you is the way to go, and we have a great deal of experience in doing that. Looking at technology to efficiently handle employee benefits is an area that has evolved rapidly over the last 10 to 15 years, but a lot of companies are still having to deal with a lot of nitty-gritty concerns from their employees, and they're handling these all directly as opposed to using technology to put the correct information in front of employees and enabling them to make decisions about their health and welfare. And we have a number of solutions there that would be of interest to you. Talking about voluntary benefits, there is now a wide range of benefits that are available to organizations that are particularly designed to add value to the mix of facilities available to individual workers, but at the same time not adding cost to the employer. Choosing the right voluntary benefits, ensuring that these are presented and managed for your workforce is a critical issue, and we have capabilities to not only help you select the right benefits that you need, but also to manage the process by which your employees use these benefits going forward. The environment that we work in is complex. In health and productivity, the legislation changes rapidly, the requirements for employers are sophisticated, and it is quite easy to find that you are not fulfilling the needs that you have with regard to tracking legislation, reporting to the government, etc. And we have a very sophisticated compliance group that looks at this on a regular basis and would be available to you to use. And finally, I think in terms of how we pull these things together and how these programs are applied, there's an opportunity to share in best practices. So therefore, if we have some organizations that want to try certain developments, certain wellness programs, certain claims management programs, there's an opportunity as a group to sit around the table and discuss what are best practices, what are areas that are working more effectively for one company rather than another, and to share these. And so part of what we would like to do in the future would be to get people together to talk about their experience and how well the programs are working. So moving on, we wanted to talk about one of the concepts that we use a great deal in Alera. In fact, Alera uses this program for its own companies, and it's setting up a captive insurance company. This is a complex program, but in principle, how it works is relatively straightforward. If you look at the cost of healthcare for an employee group, the majority of employee healthcare costs are predictable. You can take 80–90% of employee healthcare costs, and you'll know that year on year the same costs will come through. So there's no magic about that, and there's no insurance plan necessary to cover those costs. It's just deciding which of those costs are going to be predictable and which are going to be catastrophic. So there's a few claims that are unexpected, and these can be very expensive, and in some cases there are employees that have $1 million a year of expense, and they're simply being treated for an illness that they hadn't anticipated, and neither had you. So some of those are needing to be managed, but the bulk of healthcare costs are simply paid out to the people that are providing the services. So if you put a large number of similar employers together, they only need a small amount of insurance protection. Everything else is administering those regular costs. So setting up a captive insurance company to provide coverage enables you to do this at minimum cost and maximum control over future costs. If, as a group of employees, you buy together, you can negotiate lower costs than working on your own. And so therefore, putting together a captive insurance company that basically administers those predictable costs and provides insurance against the catastrophic claims makes sense, and we have teams of people that do that enable people to build their own captives, which are essentially an insurance company that you own, and this enables you to gain these cost savings. So in terms of how this program works, we can look in future meetings about the details of this, but in principle, a lot of the costs associated with fully insuring a program through an insurer, or even self-insuring a program through an insurer, are reduced by having a captive structure. So moving on from there, I wanted to just cover the sort of three main areas that makes captive programs attractive. We've talked about managing costs. So basically, if you set up a program where most of the costs are predictable, then that money can sit in your account until you spend it, and therefore you can save money by not passing the costs over to an insurance company. You can reduce frictional costs, so risk charges, administration costs can be reduced. If you're buying in bulk, your administration costs should be lower, and as a group gets bigger, it should get smaller again. So there are ways in which these frictional costs can be reduced. There's less external premiums, so it's not that you're putting out all your money to pay for insurance. There's only a small part of that pays for covering catastrophic claims. And because the money sits in your account and accumulates interest, there is a return on how much you've saved by keeping these costs inside your bank account over the year. So there's a number of ways in which you can manage costs through the captive. In terms of improving risk management, we structure captives so that the entire risk is covered during the year, so that there is no danger of you, or minimal danger of you having to spend more, having decided how much you need to spend at the beginning of the year. So you are operating and managing a central risk pool, therefore risks are covered both by yourself and by the group itself. You apply stop-loss reinsurance to manage peak risk, so that is the piece that covers catastrophic claims, and overall you reduce the cost of risk significantly. The third part is often overlooked, but is extremely important. You increase control by having better data and better claims cost management. So therefore, you can design insurance programs that work specifically for your group. You can manage costs by understanding what's happening to your employees, where they're making claims, what's causing that, and taking that cost management by applying health management programs to reduce those underlying trends. And finally, in terms of understanding what's happening, captives are totally transparent in the sense that every quarter you get a P&L that says where you've spent your money and what that money has been spent on, so that you fully understand your costs. And in terms of trends that you should be concerned about, these are identified and solutions put together to manage those. So overall, there's a wide range of positive reasons for setting up a program like this. And captives have been established since the 30s. They've been used throughout the US extensively, and these types of programs are something that has been taken up by a wide range of employers through the US. And we obviously have a great deal of expertise in this. So moving on, the types of savings that you can make on the frictional costs of setting up a program are significant. So in property and casualty risks, in retiree medical risks, in disability risks, you can see there that there are very significant ways in which you can reduce your costs by structuring programs like this. And I want to focus specifically on medical stop loss because that's an area that is of interest to you. We see savings between 5% to 25% of frictional costs through medical stop loss. And as an example, we have set up a program for a group of employers in Massachusetts that's been running since 2012, or sorry, 2013, and that program has had annual cost increases of 3% or less, and it has generated many millions of dollars to return to the group that's involved. So we have some demonstrations of tight risk management, tight financial management, working with local providers. This is run through a couple of local health insurance companies, and the savings have been substantial, and we could identify similar approaches for yourself. So let's just look at how medical stop loss works. If you have, and I know a number of you have self-insured programs, but if you had a fully insured program, then you simply put the premiums inside and you get the benefits out of the plan. If you've moved to a self-insured program, then the costs are divided between administration, claims, and coverage for stop loss. So that enables you to make some savings from fully insured programs, as we've demonstrated here. If you look at the captive, there is an opportunity to reduce administration costs, but we've not mentioned that here. Over time, the administration costs should shrink. The claims will be the same because we're doing a like-for-like comparison, but the captive stop loss piece is smaller than the typical self-insured stop loss, and therefore there's some further savings to be made. And as I say, the administration is reduced, and the fact that cash stays with you enables you to get investment income as well. So there's a number of ways in which you make savings, not only from fully insured, but also from self-insured programs by moving to a captive. And this illustrates how this works. And the captive is a very dynamic thing that you're looking at ways in which you can manage the claims, looking at ways you can reduce the admin, and over time, as more participants participated in a captive, then the amount of stop loss that you need reduces because a lot more cost can be absorbed by the group. So that really gives you a sense of how that would work. So let's talk about how you can impact that claims block. So using less healthcare is one of the critical parts of managing your costs. As I said before, in the captive, you know where your costs are being spent. You know which employer is spending a quantity of the total claims cost, which employee is being treated for which particular illness. So you understand exactly where every dollar is being spent. And claims costs and cost trends are transparent, and administration costs and cost trends are transparent. So you can look at ways in which you can manage administration over time and reduce that cost simply by buying more effectively. And looking at your claims costs, we can work with you to identify health management programs that will reduce adverse cost trends. Therefore, for example, amongst a number of our clients, they have found that specialty pharmacy has been an accelerating cost for them going forward over the last 2 years. And you'll have seen things in the newspaper about criticisms of drug companies and the margins that they're making on existing drugs. Excuse me. So that's an area where you can identify which pharmacy provider is going to be most cost effective in terms of treating the illnesses of your employees. You can identify better contracting arrangements and better individual management of particular claims that will reduce that cost over time. And you can take other opportunities from behavioral health to lower back pain to diabetes, and address those with specific programs that will reduce these adverse cost trends. And that will start to reduce your overall claims cost over time. As I said, on the administration side, if you're buying a lot of administration, there'll be competition to provide administration, and you can choose the best providers. You can evaluate these on a regular basis, and you can gradually reduce that cost over a number of years. So for the few catastrophic claims, selecting a good stop-loss insurer can help manage these. And, you know, we have a variety of stop-loss insurers, some of which are better at certain things than others, and therefore knowing what type of claim is coming through and these trends would enable us to work with you to identify the best stop-loss insurers. Overall, this whole process is you running the business and us providing some support to do this reduction in utilization. So just looking at efficiency, as you start to focus on the health needs of your employee population, you stop simply buying health insurance and you start to really make a difference in terms of efficiency and productivity. Because workforces vary in terms of their age and in terms of the type of work they do, their requirements differ, and having a captive enables you to identify different segments of your employee population and enables you to understand what's happening with those specifically. You can therefore develop wellness programs that directly keep employees out of hospital. You can, if for example, there are certain issues that you need to deal with regard to anxiety, with regard to stress-related illness, then you can develop programs that deal with that and keep people feeling much better about themselves and therefore less likely to have stress-related illness. What we find is that as the standards of medicine and the standards of treatment improve, there are more and more people that have chronic illnesses that are still able to work and still able to be effective. However, they are often dealing with complex drug and health management programs, and as we know, they slip off of these programs and they end up back in hospital. And so therefore, designing programs that identify people with certain chronic illnesses and giving them the support to ensure that they stick to their drug regime, that they go in for testing on a regular basis, that their doctors are supporting them effectively. These types of programs enable people who can be quite disabled to continue to be productive in the workforce. In terms of how workers operate in the in the workforce. There's a variety of ways in which employees are have issues that are dealt with. They can end up having a workers' compensation claim, a disability claim, or they may end up in hospital through their medical plan. And really how these work, how these interact, and how you can make the experience efficient and comfortable for the employee and at the same time cost effective for the company is a whole area of expertise that we have, which we would be able to offer you, and we'll talk a bit more about that in the future. So really that is an area that that we've done a lot of work on in terms of looking at different forms of paid family leave, looking at ways in which people are treated if they have an accident, and how they come back to the workforce, and how the environment is modified for their reduced capabilities. All these types of things are things that make your workforce more efficient, cost you less, and move things forward. And then finally, how you get involved with the MA health system. There's lots of interesting areas. There's lots of discussions that can be had with some of the major hospital chains in Massachusetts, and they can work alongside you and really understand your particular issues and how you can manage it. So that's really a whole range of things that we can get into as we move Health Bank forward. The key is understanding what's going on with your employees' health and productivity and how you best react to that. And so these are exciting things that we can look at going forward. So what are the next steps? So joining Health Bank, as I said here, it's less painful than a flu shot. You'll be pleased to know. You simply have to contact Jessie Marshall at Spring, and you remember, she'll be happy to take down your details and ensure that you get on all the communications that we're going to send out. And for that, we would invite you to join our Ask Spring program. It's something that's up and running in our disability operation at the moment, and this is a broader-based program that we're offering you, that you would be able to ask us any employee benefits or risk management question that you have. And in our experience with working with our clients, these can crop up at any time of the day or night, and we'll be happy to return to our appropriate experts and come back and give you the answers. And Jessie will be able to provide the details of that and how you'll be able to contact us. And then finally, by joining Health Bank, it puts your name in the hat for a new Fitbit, which we feel is one of the things that is useful to hand out to employees to keep them measuring their steps, looking at their wellness and sleep patterns and things like that. And we'll announce the winner soon, and so that that will be something that we'll be offering incentives going forward for various programs that we're running. So what are you going to hear from us going forward? So we'll be sending you Health Bank updates in a few weeks, and we'll invite you to participate in our next event. We think the next event is going to involve breakfast, which is very important for me. I don't know about the rest of you, but breakfast is pretty critical. You'll be able to meet Jessie, which will be equally important. You'll be able to put a face to a name. And we're going to talk about the new Massachusetts FMLA laws and what they mean for you. Between now and then, they may well have changed, but what we will talk to you about is the latest iteration of what's happening. We'll include an update from the Alera compliance team so that you'll be able to hear what's happening on that side. And we'll have a discussion on hot health topics of interest, new things that are cropping up that we think will be of useful of use for you and your workforce. So finally, here's the Alera team. We've got me up on the top left there, Karen Landry, who's our managing partner, Stephen Keshner, who's our chief actuary. We have an actuarial team in-house that does all the analysis that you'd expect for health programs. Todd McDonald, who's a senior partner at our colleague company, Aisling. And then in the next page, I think we have a picture of Jesse and a couple of my colleagues, Prabal Lakanpal, one of our senior consultants, and Mary Richter, who heads up our market development. And these are all people that will participate in future programs, and you'll be able to get to hear from them. So thank you very much for today. We very much appreciate you participating in the program. We hope that this is an exciting new development that you feel will be of value to you and your employees.